can also be used in your company as an asset manager. It can be used for budgeting to check your actuals versus your variance. The overall goal of Tyms for your business is simply to help you grow. And today we would be diving into this with our three major speakers that we have. And the first speaker that we'll be having is Olufunsho Olaojo, who is the managing partner at Primo Tax. And then thereafter, we will be having our finance manager, Mobolaji Maborukoje, who would also be talking about charts of accounts and also be showing sometimes infographics on expenses and revenue. And lastly, we would be having our product manager at Tyms, who is Praise Aronilewa, who would be doing a short demo on charts of accounts. So in the course of this webinar, if you have any question, this is how it would go. We would want you to drop your question per session into the chats. So our team members will be on board, will be in the chats to answer some questions, and then thereafter, when we are done with a session, the speaker for that session would look through the comments and pick one or two questions just shed light on those things. So let's dive right into it. And first, I'll be calling on the managing partner at Primo Tax, Olufunsho Olaojo. Thank you for gracing us, Olufunsho. How are you today?
Yeah, Homolade, good afternoon. I'm very good today.
Hope you are doing fine. We are so pleased to have you on this webinar.
All right, thanks having me today. It's a pleasure being here.
Yeah, so you'll be talking about the importance and the purpose of charts of accounts, and we hope that our viewers can pick one or two things from this. You have the floor now.
All right, thank you very much. I would like to share my presentation. If you would allow me to do that. Okay. Just a moment. And okay. All right, please confirm if you can see my screen. Confirm that you can see my screen so that I can proceed.
Not yet.
Okay. So just a moment. Okay, so I think I'll proceed. I'm having difficulty sharing from my end. So, but I will just proceed with my presentation. Then along the line, I get to fix it, right? So, all right. So without wasting so much time, today we'll be talking about unraveling the importance and purpose of chart of accounts for your accounting system. All right. So I'll do an introduction, right? Then I'll go into the what, the why, and the how. So we know that as business people, we know that for every business decision we take, it's important that we always consider the what, the why, and the how. And then we'll take questions thereafter. But before I go into my presentation, I would like to start with a quote by Warren Buffett. So in this quote, the quote reads, "Accounting is the language of business." I'm sure we all know that accounting is the language of business, and that is how companies in the world get to communicate their financial performance to stakeholders. So stakeholders, of course, includes government, includes the investors, and all the other interested parties in the public, right? So moving from that, the financial statement itself, it's an important component of financial reporting, right? So, but then you can't have a financial statement if you don't have a chart of accounts. So the chart of accounts forms the basis for accounting. It's only the chart of accounts that then allows you to keep proper bookkeeping and accounting, which you are then able to process, analyze, and present as financial statements at the end of the financial period. So moving away from that, I would like to discuss what the chart of account is. What is chart of account, right? It's simply a listing of account heads, right, in the company's general ledger. I'm sure we're all familiar with what a general ledger looks like. So it's basically a listing of those account heads. And when we say account heads, what we mean is that we mean accounts that we use to record our assets, our liabilities, our revenue items, and expense items. So these are basically what accounts, what makes up the various components of the accounts, right? And those are the things that also form some of the components of our account heads. So moving away from that, why is the chart of accounts important? Why is it important? First things first, it's like I said it's a listing of all account heads, right? So it's basically a map, right, of the financial statement of a company. So it's basically a map of the business, and it shows the various financial parts. So meaning that, of course, we know all the parts of the financial statement are the components. That's what we mean by parts, the components. And so the chart of accounts simply serves as a roadmap for a company's record keeping and financial reporting. So it's a guide to record keeping and financial statements. It also serves as a roadmap for the entire financial reporting system. So it's like a framework, right? It's a framework of all the different components of the financial statement. And that is what enables us to present a whole document that we then call a financial statement, right? So another thing that it does for us is that it makes accounting easy for accountants, right? So you are able to easily identify the right ledgers where you will record transactions. So chart of accounts simply breaks the account into different components, and it helps you identify easily where to post transactions. For instance, once to post rent expense, it helps you determine how to post it accurately, right? So of course, it goes into accrual, and then it gets unwind into the income statement on a monthly basis. So this is what the chart of account does, right? It provides that framework and that guide for you to be able to correctly record transactions. It also makes it easier for you to follow financial reporting standards. We are aware that we adopt international financial reporting standards in Nigeria, right? So what the chart of account does is that it helps you follow the standard easily, because of course, at the point of setup, the team setting up the accounts will have also considered all of the standards that apply to your business. And once that is considered and factored into the chart of accounts, then it provides that easy flow for you to be able to adopt financial reporting standard. And then lastly, it ensures that your financial information are accurately presented. So this helps you. So the financial account is important because it then helps with accurate financial reporting. All right. So that's talking about the why. Then I move into how. So how does a chart of account add value to your business? How does it really add value to your business? So first thing I have there is that it reduces errors. So it ensures that your transactions are mapped correctly, and then it reduces financial errors across your business. And it also helps support better money management and improves the overall financial health of the business. Now, another very important reason, right, and how a chart of accounts add value to your business is improves visibility of transactions. So for in the financial statement, each account, right, and sub-accounts, they are assigned unique code. So of course, we all know what we call codes, right? Ledger codes that we all assign to different ledgers. So those ledgers have specific unique names and codes. So those codes, once you post, so when you are trying to analyze or do a report on a particular expense head or group of expense head or income items, it makes it easy for you to be able to access those information that you require. So it improves visibility, right? And you're able to exactly monitor how money is moving out and moving in your business. And then it also helps for accurate reporting because transactions will be posted into specific account heads. And of course, the chart of account the chart of accounts will then help you with that with an accurate reporting of those transactions that have been reported in those different account heads that you have done. Then the most important one for me, right, because of course I'm a compliance person, is that it helps with compliance. It makes compliance easy for everybody, for you as an accountant, and even for the consultant. And it also makes it easy for you when you are engaging with the tax authorities. So, and then of course, on a monthly basis, where you need to pull out sales reports, or you need to pull out withholding tax ledgers and all of that, it makes it very easy for you to at least get a first level information that you can then process to determine the exact, and come up with your exact tax returns. All right, so I hope with this few points I've been able to explain to you what, how, and why you need a chart of accounts for your accounting. All right, thank you.
All right, thank you very much, Olufunso. Thank you for that. I'm trying to go through the chat now. I think there is no question for now, but let me just ask. Okay, so for those who are very particular about financial errors, some might actually feel like, okay, how easy is this? Like, let's say I have to post to this and this. Like, how feasible is it with charts of accounts to actually do these things? Is this that once you post, automatically it just goes to those places and easily you can be able to, just align that, okay, this is for rent, this is for expenses?
Okay, thank you for that question, Maladi. So yes, so a lot of times, right, after posting, you need to also then go through the account. So what the sort of account does is that, what Tyms accounting platform does is that it gives you visibility, right? So after posting, you're able to see, you can able to see the trial balance like almost immediately. You can see the GLs as well. So it helps you. So you're able to then see whether the posting has been done correctly, and then even so of course, we need to first understand financial reporting. We need to first understand the correct entries to pass as an accountant. That's where it starts from. What are the correct entries for this transaction, right? This particular expense, is it an accrual, or it's an expense that relates to just that month? So these are all the things that you consider first before going ahead to post entries. Once you have done that correctly, then you then go ahead to make your postings. After doing your postings, it's better that you also go back, check your GL, look at your trial balance, and then check whether the entries you've made are correct. So it's not, of course, it's garbage in, garbage out. So it's not automatic. The system is not an angel. So the system still requires a lot of input from the accountant. So that's, I hope I've been able to answer the question.
Yes. You have been able to answer the question. Thank you very much, Olufunso. So for those who are just joining, Olufunso is a managing partner at Primo Tax. He just through the importance and purpose of charts of accounts, and he made mention that chart of accounts is majorly provides framework and roadmap to your recorded transactions. And he also made mention that it makes accounting easy for accountants by helping them to post into different books. And also he also made mention of it allowing you to, it's enabling your business reduce common errors that might occur. And he also made mention of the compliance part, like it makes compliance easy for tax authorities, especially for those who have big businesses. And Tyms helps you in achieving these things also through the chart of accounts that we have, chart of accounts feature that we have on Tyms. Thank you very much for your time. If we have further questions on chart of accounts, I will be calling you back to answer those questions. Oh, I think someone has a question. Olubumi, can you please drop your question in the chats? If you have any question, please kindly drop your question in the chats. Thank you very much. Thank you very much for now, Olufunso.
You're welcome. Thank you,
So
Maladi.
you're welcome. So we'll be moving to the second part, and then our second speaker will be coming on board. He is the finance manager at Tyms, Mobolajima Borukoje, and he will be talking on the use of Tyms and understanding the appropriate categorization of charts of accounts into income, expenses, and all of that. And it would also be showing us sometimes post infographics to describe charts of accounts. Welcome with me, Mobolaji Maburukoje. Thank you very much. And also, please don't forget, if you have questions, please drop them in the chats. Thank you.
All right, I am Ladi. Thank you very much for having me. Hello everyone. My name is Mobalaji Maburukoje. I'm a financial manager at Tyms. The topic I'll be speaking on for the purpose of this webinar is understanding the appropriate categorization and classification of income, expenses, assets, equities, and liabilities. Basically, the various sub accounts under our charts of accounts. So basically, to buttress more on what Mr. Olaojo has said, for every organization and every business, the major metrics or the major way to present their financial and their performance is through the use of financial statements. And in the process of creating these financial statements, I mean, transactions needs to be recorded. Then they are classified and organized and indexed also in order to fit into an accounting system. And the charts of accounts are like the basic frameworks needed to create the said accounting system and structure to move forward. And for the purpose of this webinar today, I'll be explaining the various charts of accounts that we have. So the charts of accounts are they cut across sections from revenue and expenses. These are like the various accounts that are dealt with, particularly by the income statement, which is one of the financial statements used to measure, used to report financial performance. And also we have the revenue, equity, and liability. These are basically what make up our statements of financial position. So to begin with, we'll be starting with our business assets. So what are our assets? Um, our assets are basically resources that our business spend money on to to acquire, and in the hope of providing future benefits to our business. So what are we saying in essence? What we are saying in essence is that these various assets are resources to our business that we expect to receive future benefits from. For example, they can be current assets, or they can be classified as current assets or long-term assets, non-current assets. So in this case, in the case of current assets, we are talking about our cash in hand, our account receivables, those are our debtors, and so on and so forth. While under the long-term assets, we are talking about our plants and machineries, our buildings, our furnitures, and so on and so forth. These are resources to our business, and we expect to gain future benefits for them, be it settling settling payment and so on and so forth. So we also have the liabilities. So basically the liabilities is like some sort of opposing side to our assets. So liabilities are basically your companies or your businesses financial obligations. These are obligations that are due for your company to take responsibility for. So liabilities also cut across both the current and also the non-current liabilities, so the long-term liabilities. These basic classifications are obligations that are due under under a year. Those are your current liabilities. Why obligations that are due for a longer period of time, those are what we term as long-term liabilities. Also, we also have our equity, which basically is, is formed by the amount of money that the owners of a business have put into the business, or the share of value that they own in that particular business. So basically, this our equity is also a major or a key component of our charts of accounts. Examples of these various equities can be owners capital, common stocks, our retained earnings, and so on and so forth. So for instance, we are getting cash inflow or money pumped into the business from our various business owners, be it partners and shareholders, and so on and so forth. This particular source of funding, or this particular source of money coming into the business, is what we term as equity. And I'll quickly run through revenue and expenses also. So revenues are money that come into the business, or inflows into the business from the business major business operations. So money that comes from our core business operations, be it sales of goods that we make, or if it's a business that renders services, and so on and so forth. Also, expenses are money that a business expends for its core business operation. Not necessarily its core business operations, but whenever a business expend money that relates to the business in particular, then we are talking about expenses. So these expenses can range from wages and salaries to rent, and so on and so forth. So understanding these various charts of accounts is integral to understanding the accounting process. So these five charts of accounts, there are barely any transactions, or I would say there is no transaction that you want that happens or that occurs in your business that is still not within the scope of these five various accounts. So understanding the various accounts that are involved in each of your business transactions will be able to help you to understand, oh, this is the account to receive so value, this is the account to give so value, and that would be very, very helpful in understanding the accounting process of your business in general. So okay, so all that being said, accounting entries are made following the double entry principle. So basically, the double entry principle states that for every debit entry, there must be a corresponding credit entry, and vice versa. So in that sense, basically what it means is whenever a transaction occurs in your business, it always involves at least two accounts. So there are usually two parties to each transaction, mean at least two parties to each transaction. So for instance, let's say money is coming into your business. Okay, owners are giving money into the business. So this particular transaction can be understood as equity is coming into the business. So which two accounts are involved in this particular transaction? So we can see that the equity chart of accounts is involved, and also the asset chart of accounts is involved also, because cash is a current asset, and also equity, owner's equity is, or owner's capital is classified under the equity chart of accounts. So understanding these charts of accounts and the various sub accounts under them is integral for posting of your various financial transactions. So based on the infographics that we have here, you can see two sides to the various charts of accounts. So we have the revenue, the equity, and liabilities on a part, while we also have the expenses and assets on the other side. So what the first part have in common is that um, whenever any of these transactions take place, so money is whenever any of these transactions takes place, money is coming into the business. So whenever you are making a revenue, or receiving an equity, or receiving some form of liabilities from probably in form of loans, credits from various suppliers and so on and so forth. Money is coming into the business. Why? On the other, in retrospect, on the other hand, when you incur an expense, money is leaving your business. Same with purchasing an asset. Money is also leaving your business. Although you might be getting value for these monies, but then like that is a way to simplify the implication of these various accounts. So it says here that
Hi, Mobolaji, you are muted.
oh, I'm so sorry about that. Please, where
Just continue from where you stopped.
oh, okay. So all right. So whenever as we have here we can see on the on the infographics that is being shared, when money flows into the business through any of these three activities, such as our revenue, equity, and liability, the cash or bank account is debited. So basically what it means is um whenever money comes into the business through any of these activities, it means the value of um our cash or bank account is increasing. In other words, whenever we are making sales, money is coming into our business and the value of our business is value of our cash account is increasing. Same with our equity account. When money is coming into our equity account, the value of our cash account is also increasing. And also when we receive loans or um when we sell our bonds to our various bond subscribers and so on and so forth, the value of our cash account is increasing. Whereas on the other hand, we see when money flows out of your business through these activities, your cash or bank account is credited. So in other words, when money is leaving, whenever any of these two activities are taking place, so whenever you are recording an expense or wherever you are recording the purchase of an asset, um, money is leaving your business, and in that sense, your bank or cash account is credited. So meaning money is leaving, the value of your cash or bank account is reducing. So the chart of accounts is an interesting tool that we can use for proper classification of our various business records or transaction records in general. And understanding these various charts of accounts is very, very integral to the basic accounting process and posting of your various transactions and so on and so forth. With this, I believe I've been able to shed more light on the various charts of accounts that we have, and we've been able to pick one or two from this particular session. Okay.
All right. Thank you very much, Mobolaji. For those just joining us, this is powered by Times, and we are talking about mastering charts of accounts. And our first speaker already spoke about the importance of charts of accounts, and the last speaker just spoke, Mobolaji, spoke about understanding the various things of that chart of accounts, which is the revenue, equity, liabilities, expenses, and and assets, in order to be able to classify into proper accounting. So he made mention of something very, very profound. He made mention of money in and money out. Like, he made mention that being able to classify into various charts of accounts, you have to understand these five key things so that you will know where to post these transactions to. And he mentioned about revenue, which is money coming into your accounts. Let's say maybe you make sales for a particular day, it is going to be termed as revenue and go under revenue. For equity, it could be the capital that you use to start the business, it could be stocks, it could be maybe money from even shareholders. And for liabilities, these are things that you've incurred, maybe loans that you collected from credit facilities or something. And for expenses, it can be class maybe like rent, maybe you have to like pay salaries and all of that. And for assets, are things that you buy within your company. And Times as a tool helps you with the understanding that you have. Like you said, like the first speaker said, Times is not a robot. You have to like understand these 5 key things so that you'll be able to easily classify um into various charts of accounts. So I will be going back a bit to Mr. Olufonsho. Somebody asked a question in the chat session. I think the person is new to basic accounting. Can you like in just a minute or two explain charts of accounts in a layman term in a minute or two?
Okay, thank you, Molade. Yeah, so in layman terms, I would say a chart of accounts is like when you want to build a house. You first thing you do is you draw a plan, right? So you draw a plan. So you identify where you want the living room to be, where you want the kitchen to be, if there's going to be a stairway leading to the upper floor, if it's a duplex, you also map that out. So that is how I see a chart of account. So it's a plan, right? It's a schematics of what of how the financial reporting framework will look like. So like what's currently displayed on the screen. So it's just designing the different ledgers and sub-ledgers that would make up each of these items. So these items are the components in the account, right? But these items needs to be broken down further into ledgers and sub-ledgers. So that is what the chart of accounts is. So that's what it is actually.
All right, thank you very much, Olufonsho. Okay, so like you said, so instead of allowing your finances to be all modeled up, so easily you can classify into these things. So maybe at the end of a financial year, or maybe at the end of a certain period, you can be able to say, okay, these are the expenses that we incurred. This is the total amount of salaries that we paid. This is the total amount of things that we bought, and everything culminates into the overall financial health. To be able to know where what is from, where this is coming from, and then where this is going. I hope that answered your question, Olubumi. So the thing is, at times we make room for more questions. You can give us a chat us on WhatsApp, and also you can also request for a live demo. We would have a product manager and our team with you one-on-one to answer questions, and we are responsive. So if you have issues, maybe you or your finance officer at your company, you can reach out to us, and then we can explain these things better, just to give you the full benefits and services that we provide at times. Thank you very much, Mobolaji, for that talk. So now we'll be going to the final session, which is the live demo on Times on charts of accounts. And I would be calling on our product manager, Praise already in Lewa, to take that. And also, please do not forget, while Praise is setting up, please do not forget that if you have questions, you can put your questions in the chats. Either of the speakers would be available to answer your questions. And also, for more information, if you want to know more about Times, you can just log into check our website at www.times.io. You can check our features, our subscription plans, and I can assure you that Times is on the way to making your accounting processes better. Praise, are you ready? Because I think the audience is ready for you. Let's go.
Yes, I am. Thank you, Moladi. All right, so I'll be sharing my screen now. These are really insightful sessions. In fact, I think I've taken down notes, which I'll be sharing in the course of the demo. All right, so let's just move on. Good evening, everyone. My name is Praise Aronilewa. I'm the product manager at Times. And at Times, we've built a software which helps you to manage your financial data and helps you to streamline on your financials by doing various things. Just that we'll be focusing on the chart of accounts today. These various things just help you so that at the end of the day, you have financial statements which will present your business in such a way that it shows that you are financial literate, in such a way that it shows that you're actually serious with your business or organization. All right. So I think one of the things I picked was that the first speaker said that Times is not a robot. And, we must all agree to that. So you must have the basic knowledge before you proceed and add some other things, right? But one thing we have on Times is, while we are not robots, we also have some features that might act like they're robots. All right. So first off, let me just show you that this is the chart of account section. Basically, if you come to the account section on the Tyms application and you navigate to the chart of accounts, you get to see the various accounts, assets, liabilities, equity, revenue, and expenses with default generated sub accounts under them, right? So if you want to add others, which we would come to, you can add them. But there's also a feature on Tyms, it's called AI Generate. So if you click on AI Generate, for instance, you select the business industry. I think when the first speaker was speaking, I was able to deduce a particular case study. So let me just use that. Let me see the business industry here. That's real estate agents. Okay, so let me just pick a retail industry. Okay, there's real. Let me pick a real estate. And say I want to generate expenses account type. So I'm going to be generating sub accounts under the expenses section with our Tyms AI generate, and I'll just enter an instruction. So this instruction describes, you have to describe what your business is about, how you make money, and the things you spend on. All right. So for real estate, I'm going to say I am a real estate agent. I earn commissions by facilitating property transactions, and I'm going to be focusing on the expenses for this one. So I'm listing out my costs. My costs include marketing properties, travel expenses, and licensing fees. All right. So if I generate expenses account, all right, and then I can come to the expenses section. All right, so this tab rails shows the auto-generated chart of accounts by the expense, by the AI generates from Tyms. So it generated for me marketing expenses, travel expenses, and licensing fees like I added. So you need to know the basics. While that is right, Tyms can also help you generate for revenue, generate for expenses, for equity. Let me just give another instance. So if I click on AI generate, let me see another instance I can just pick up. I can say I operate an e-commerce store. All right. So let me go through the route of e-commerce. I can go through retail. Okay. And then I say I want to generate a revenue account type. All right. So I can say I operate an e-commerce store. Making money by selling products online. My expenses involve inventory purchases, shipping costs, and marketing expenses. All right. So I think this is also a very good one for expenses. So I'm just going to copy. I'm going to copy that too, right? So let's generate the revenue account first. All right. So just going to have a quick refresh and come to revenue. All right. So if I come to revenue, I can see product sales, marketing income, shipping fees, gift card sales. All right. Now let me generate expenses for that particular field too. Yeah. So retail. This is going to be expenses, and then I can just paste what I copied, right? And generate expense account. So if I generate expense account, and I refresh and come to expenses. You see, I can even see cost of goods sold under the cost of goods sold section. So I have direct cost associated with production of goods sold, and I can also modify this myself by editing it. I also have for inventory purchases for the e-commerce store. So our AI generate just auto generates based on the information you give it and the industry and account type you want to generate. All you need to do is describe what your business is about, how you make money, and the things you spend on. And it auto generates chart of accounts for you, which can be modified. All right. So for that, that's auto generation. And then you have your assets, just like the previous speakers have spoken about. Under the assets section, you have things like cash, the current assets, the fixed assets, intangible assets, and others. So you just come under each of the assets, click on this, and then you can create one under each of them. All right. So under the liabilities too, by default on Tyms, you have the current liabilities, the long-term liabilities following the accounting standard, right? So under current liabilities, I can just click on plus and then add an account name for short-term debt. I can add a description if I like. And this account number is not your bank account number. It's just a number used to track this particular account, which isn't compulsory. All right. So just click on save. And you have your short-term debt added here. All right. So you can come to the equity section too. And under the equity section, you have things like common stock, retained earnings, additional paid-in capital, and this. So let me just look at something else I can add under the equity section, which I jotted in the explanation, right? So I can add dividend, for instance, as an account name under the equity section. And then I can add a description. So the description can be something like distribution of profits, within stakeholders within the company or something like that. All right. So I'll just do that. Click on save. So one thing I'll do is I'll show you where each of them are going to, be taking effect and when you can select them within the application. All right. So also for revenue, you can come under the revenue section and just click on this, add an account name. So for instance, let's say I also sell lubricants. I can say this is lubricant sales and just add it to my chart of accounts. Click on save. I have lubricant sales here, right? And then I can add expenses. Let me see if I need to add salaries. If I don't have salaries, okay. So I can add salaries. All I need to do is I can come under expenses directly and click on the plus, right? So for things that will fall under my cost of goods sold, I can come here and click on this plus. So I'm adding it directly under the cost of goods sold account, right? So I come to expenses, click on this, and then I add account name as salaries. And then I click on save. All right. So the next step will be for me to show you where this would take effect. All right. So if I go to the record section, the bookkeeping section within the Tyms application, and I click on the sales section, everywhere in the sales section where I attempt to record a particular sale, I can see under the sales account the various chart of accounts under the revenue sections. So while I record a particular sale, I can select this and then it takes this into effect and is shown in my income statement. All right. So I cancel and then I go to expenses. If I go to expenses too and I attempt to create an expense and I check the expense account, it shows me everything under my expenses chart of account. The ones I've added and the ones that have been added to me by the AI generated assistant. All right. So also, if I come to accounts and then I check the journals, if I attempt to create a journal or to post anything technical or anything that cannot be posted directly from the sales or expenses, if I add an item, I can see that the various accounts, starting from assets to all other chart of accounts, including liabilities, equity, revenue, and the expenses fall under this section. So I can see where to select everything that I've added either manually or that came with the Tyms application for my chart of accounts and easy classification, right? So the next thing will be for me to show you where these things take effect. So I've shown you where they can be created from, I'll show you where you can see them to select them. And now I'm going to show you the implications on a financial statement. So we have financial statements like the trial balance, income statement, balance sheet, cash flow statement. All right. So if I come to my income statement, I should see every chart of account I've created for revenue and the expenses, right? So I'm just going to click on revenue and it's not displaying. So I come to my settings and then I can check to show zero balances because I have no data under them yet, right? So I can see all my various chart of accounts under the revenue section here. I can see the ones under cost of goods sold here, and then I can see the ones for all the operating expenses I've added. So you can see the implication of the revenue and expenses on your income statement, right? And then for equity, for liability, and the assets, you can see them on the balance sheet, all right? So just come here, and then there's a breakdown of all the accounts, all the sub accounts under each of them for assets, for liabilities, and for equity. So as time goes on and as you begin to add data into the Tyms application, you begin to see the effect on these particular pages. All right. So I'll just be here for any questions, but this is just a general overview of what the chart of accounts offers you on the Tyms application. Thank you.
Thank you very much. Praise for
All right.
that. Please, if you have questions, please kindly drop in the comment section. So I think Olufunso is trying to answer a question from I think Olubumi or somebody on the chat. Please, Olufunso, please can you answer verbally so that she would understand better? Sorry to put you on the spot right now.
Okay, that's fine, Omalade. Yeah, so I think she's mentioned that the grant is for shares. I really don't understand how how that would come about. So typically, grants would be given to support the acquisition of assets or for reduction of an expense. So based on accounting standards, that's typically what the standard caters for, right? So if it's an asset, then you have two options. Is either you recognize deferred income, right? For the grant got in, and then the deferred income is then unwind into income statement over the life of the asset, right? That's one option. The second option is to directly apply the deferred income on the cost of the asset. So, but a lot of people prefer the first option because when you apply the deferred income directly, the grants directly on the cost of the assets, you then reduce the carrying amount of the assets. So that's what I know. So I don't know if you can share, if you can shed more light on equity. I don't understand how that comes to play.
All right. Thank you very much. I think she would ask further questions in the chats if she has. So someone asked the question, Mobolaji, I'll be directing that question to you. She said she has been doing accounting for a year on paper, and how can she like transition? Mobolaji, are you there?
Yeah, sure, I am.
Okay, please can you give an answer to that with the use of
All
times?
right. So, for the question, you've had your various accounting records on paper for over a year. So basically, there would be like a trial balance of most of your accounting records. So you can migrate with that to your Times account and just give an opening balance for the various accounts that you currently have. And from there, you can pick up from you can pick up with those balances and carry on your Times account.
Is that all? That's all, right?
Yes, yes. Or is there more to the question?
I think that's just the question.
All right.
So Etuk, if you have more questions, you can actually drop them in the chat. Oh, someone is asking again, Mobolaji, can you please explain more on asset, liability, equity, expenses, and revenue? Maybe just in a minute, just as short and as simple as possible.
All right. So equity, assets, revenue, liabilities, and expenses are the various charts of various accounts that make up your charts of accounts from services that you render, while your expenses are the various activities or various business costs that you incur into day-to-day running of your business. And also we have our assets, our resources that um, are resources that an organization purchase in order that they expect future benefits from. They are valuables that are owned by the organization, such as our cash in hand, our cash at bank, our account receivables, our buildings, vehicles, and so on and so forth. And also, um, our liabilities is some sort of an opposing side to our assets. So they are basically obligations that our companies that are due for settlement by our organization, while equity is money that flows from that flows into the business, or values that flow into the business from the various shareholders, owners, and so on and so forth.
All right, thank you very much, Mobolaji. So, thank you very much to our three speakers for today. For those that joined late, we talked about mastering of charts of accounts, and our first speaker, Olufunso Olaojo, the managing partner at Primo Tax, made mention of the importance of charts of accounts, and he made mention that it helps to prevent errors. It helps with compliance, especially with tax filings and all of that, and it helps also reduce financial errors. And our second speaker, Mobolaji Maburukoje, our finance manager at Times, also spoke on the different classifications, which he just explained right now, of assets, liability, expenses, equity. And he explained that. And then we had a short live demo of charts of accounts on Times. So like I said earlier, if you have further questions or further inquiries, you can reach us on our WhatsApp. You can message us on WhatsApp. We would respond to you. And also, if you are new here, you can check us out at www.times.io. You can check out our features. We have a 7-day free trial. You can every business. So no business is too small, no business is too large. We are home for you. And if you have questions, if you want a live demo, just book a demo. The link is in the chats. You can just copy the link. You can book a demo, and we would be available to explain this to you one-on-one. And also, we have virtual bookkeeping services available for those who maybe you don't have an accountant and you want someone to just be in check for you and just keep posting these things for you into your Times account. We have that available. Just reach out to us, and then we will link you up with those that we are partnering with on that. And also, if you have issues, like I said earlier, just contact us for that. So this is me saying thank you to everyone who has joined this call up until now. I hope you have learned one or two, and I hope that in our coming weeks you would also be here to link. Okay, someone is sending link to the website. The link to the website has been added to the chat. Please kindly check, and we hope that in the coming weeks you will join and learn more also. And also, we'll be sharing a recording of the webinar to everyone, so you can go back to rewatch. And also, to note again, if you have questions, please reach out to us, and we are willing to help. Thank you very much for your time, and thank you so much, Mr. Olufunso Olaojo. Thank you for gracing us with your presence. We are so grateful. Thank you, Mobolaji. Thank you, Praise. We'll meet again next week, same time, here again, learning about times. Thank you all, and have a lovely night ahead. Bye.